top 6 value stocks to buy this week. What's up, guys? In today's video, we're starting a new series here on the RonnieV show called Top Value Stocks of the Week, where I'm going to be going in every single week using Market Dash and my high five snapshots and my fundamental analysis of companies to give you all the best deals every single week of stocks you could possibly add to your portfolios or to possibly not add to your portfolios. Completely up to you. I'm just going to continue to give you alpha and put stocks on your radar. Without further ado, guys, let's get into it. And if you like these types of videos, you want to see more videos like this, definitely leave a like, drop a comment saying you want to see more content like this, and let me know. And hit that subscribe button as well while you're at it. All right, so we're on Market Dash here, and we're going to go off their top ranking, top 10 rank, right? It's based on our top ranked stocks based on comprehensive analysis of fundamentals, technicals, and market positioning. Best for investors seeking data-driven stock selection based on comprehensive scoring. Strategy focused on top scored stocks with strong fundamentals and momentum. So we're going to go through these. I'm going to give my take on them. And we're also going to go through my high five snapshots for these individual companies. So let's get into it. So number 1, we have UNH, United Health Group. You want to talk about a moat? You can't talk about a moat without talking about UNH. They are the largest health insurance company in the entire world. Massive moat, meeting massive undervaluation, guys. Look at this. This is back to 2020. They were $312. They're sitting today at $362. So they are only a little bit higher than what they were in 5 years ago during COVID. They had this run up. They're in this consolidation period from about 464 up to about, let's call it 550. And then they finally broke out. They had some bad news. A bunch of things went against them. There's an investigation on them right now, all these things. And they went down to a bottom of $237.77, rebounding nicely, but still really undervalued. They have all the way up to about $445 from $362. So they have quite a bit of room to get back to previous support, which is now flipped into resistance. So they have a little bit of time and movement from, like I said, 362 up to about 456. You want to talk about the fundamentals? We got a revenue of about $423 billion, a 15 PE, which is crazy for this type of a moat company. You have cash flow to debt of 0.37, which is great. Their PEG ratio isn't really that great, but this isn't really a revenue top line growth story or earnings growth story, right? This is more so it's a dinosaur stock, but they're severely undervalued just because of the lump sum of bad news. Profitability, you're getting almost $21 billion of free cash flow. $21 billion of free cash flow every single year. They pay out a dividend. Let's see, where's that dividend at? Well, the return on equity is 23% almost, 7% return on assets, and a massive 11% return on invested capital, net margins of 5%, free cash flow yield of about 7%. SWOT analysis, I'm not really going to go through this. It's a moat company, but you have your strengths, weaknesses, opportunities, and threats. I'll leave it right here. You can pause the video if you want to go through these, or you can go check out marketdash.io for yourself. Tell them Ronnie sent you. If you want to look at the intrinsic value, this is what mainly everybody wants to see, right? Everybody wants to see, hey, you could talk all this stuff, but I just want to know what the price is, what the valuation should be. Well, based on a discounted cash flow model, my personal favorite type of fundamental analysis model, it is a $450 intrinsic value, giving you a undervalued, or what I call margin of safety. Margin of safety means that you are buying here and fair value, intrinsic value is all the way up here. So understanding that, we have a undervaluation or margin of safety of 24% on this company. So 24% gain just to get you back to where this company should be priced at about $450.28. Moving down, we have institutional sentiment, 46% bearish, 46% bullish, 54% bearish. Your largest investor in this company right now, right? Sorry, not largest, but most popular investor, David Tepper, somebody who has massively outperformed the market consistently over his lifetime. He owns a 12% of his portfolio in this company, 2.5 million shares, almost $1 billion of this company. And his average price is $333, guys. So he's only up like 30 some bucks. He's not playing this for only 30 some bucks, right? He's playing this for the long haul. Okay. Biggest holders, Vanguard, BlackRock, State Street, all these are going to be the same typically, just because you have, everybody's retirements, 401ks, and Vanguards typically. Then we have Wall Street analysts. 17 out of 24 say it's a buy, 5 say it's a hold, 2 say it's a sell. You have current price 362. The average profit target, or the price target, is 382. The highest is 575, and the lowest is 198. So even the average is higher than what the price is today, guys. And besides that, there's insider trading. We can come down here to fundamentals. You do get a dividend with this as well. I'm looking for that. You want to look at the valuations here. You have PE, right? PE, this is lower than the median. Price to book value, lower than the median. EV to EBITDA, lower than the median. Price to sales, lower than the median. Price to free cash flow, lower than the median. You have a discounted cash flow telling you to buy. You have PE telling you to buy. It's very undervalued, guys. It's a great deal right now. Even though you didn't get the bottom, it's still a great deal today. I don't see the dividend anywhere on here, but you are getting a dividend on this name as well. Yeah, I don't see it on here. I'll definitely let these guys know to add the dividend onto the site. So perfect, guys. Number 2, PayPal. I know. And I'll just be honest, guys. I'm not invested in PayPal. Okay. I don't like PayPal. I call it Pain Pal, right? I've only had a bad experience with this stock. I don't think sometimes you're going to have investments that you'll try it and you'll know it's undervalued, but then you'll personally try it and then it just doesn't really work out between you and the investment. Just like you dating somebody always doesn't work out. But, when that happens, you don't just keep going back to your ex. So me and Pain Pal, we just don't gel. We don't vibe well together. And for me personally, I am going to just simply stay away from Pain Pal because, yeah, I mean, I trust me, guys. I get it's really undervalued. It's really undervalued. It's all the way down here. It had a high up here of $300. It's the reason I'm just gonna stay away from it is because of this. Do I eventually think it'll start climbing back up into 100 plus? I do. I do. The fundamentals, 14 PE. It's a $32 billion revenue company. Cash flow to debt 0.54. Peg ratio is below 1, which is outstanding. They're buying back stock like crazy. You're getting massive free cash flow. You're getting a great ROE. You're getting a great ROIC of 23%. Maybe I should get back into PayPal. Wow. Getting almost 15% net margins. Here's your strengths, weaknesses, opportunities, and threats, right? Your intrinsic value is 33% margin of safety if I round it up there. $92 is fair value and 64 cents. Current price is 69.77. So you're getting a great deal there. Institutions are more bullish than bearish on it. Lincell Train is the popular investor. Vanguard, BlackRock, like it's going to be like that for every single one pretty much. And then we have a average price of 74, high of 80, and low of 65. So ratings for analysts are basically holds and 2 buys. So not the greatest there, being 80. The high is 80, and you're sitting at 69, 70 bucks. Yeah, doesn't look great there. Your revenue, like we already talked about all that down there. Your valuations compared to the median, it's lower than all the medians. You can click here and you can see, okay, where's their median the last 5 years? 26.41 is the median PE for them over the last 6 years, and it's just gone down and down and down, along with not the stock, only the stock price, not the fundamentals. The fundamentals haven't been going down, really just the stock price. And you can see liabilities and assets over down here as well. And you can see shares outstanding have consistently gone down. They're buying back shares like crazy. Like crazy. They're doing like what Apple did with buying back shares. So their EPS is going to explode, guys. But again, it's just not really my cup of tea. I'm just going to stay away from PayPal, but I do wish the best of luck. And I do believe it'll work out for a lot of people. And over the last 5 years, it's down 65%. Year to date, it's down about 19%. So, and then UNH was year to date down 28%. The last 5 years, only up 11%, which is crazy. But it was going back to 2022. Let's go through here in our Discord. If you want to join our Discord, I'll leave the link down below. This is the High Five Collective Investing Discord. We also have a High Five Collective Trading Discord. High Five Collective Investing Discord. It's all about just long-term investing. It's not about getting in and out of stocks. It's about being in long-term investments. These are my gems, some of my gems in my gem portfolio forum. You can see all those in there. You can see my snapshots. This is like a running log of undervalued companies or at value, undervalued, overvalued, fair value. You can filter by that and you can basically just see, okay, who's overvalued? Where should I be trimming? Where should I be buying? Right. And you're going to see a lot of these names on here. So first and foremost, we can just type in UNH. We can search for it real quick. Boom, there it is. I give you a little snapshot of the moat and why the company is possibly a buy, right? And this just makes it all really easy for you guys. Um, right now for the High Five Collective Investing tier, it's about $49.99 a month. But I do believe that's a great value just because I'm doing a lot of the work for you to where you don't have to go through and try to run fundamental analysis. You don't have to go through and run projections and valuations. I do all that for you on conservative assumptions. I give you this nice little snapshot and I give you levels. So first, we have our snapshot, $499 discounted cash flow intrinsic value, 40% margin of safety. Here's your revenue. Here's your free cash flow, both running up. Here's your EPS running up over the next 5 years, essentially. You have technicals, growth, moat, value, and health, all very, very healthy. And you have an EPS fair value of $332. So they are getting a little close to their $332 fair value on EPS. But again, that's running very conservative assumptions. And I mainly focus on DCF, discounted cash flow. And you can just see down here, we are right now in the DCA zone. We were in the buy area down here. We were in phase one down here, big accumulation. And then we are now in the DCA zone. So we just continue to DCA into this name every single week in my portfolios. And until we get up to the L resistance or trim area, basically above 520, then that's where we would look at valuations. And if they're a little stretched, then we would start trimming. Looking at PayPal before we go back. Before we go back and look at the other ones. PayPal, massive margin of safety, $127 discounted cash flow intrinsic value, 84%, 13% undervalued for their EPS fair value, $78. Again, they're about $69 today. Revenues continue to climb, free cash flows continue to climb, and just PayPal's moat, health, growth, value, technicals, it all looks really, really good right now. And if we look at the levels, you can see that we are still 55.85 to $76. We're still in the phase one accumulation zone. We're still in this zone of just accumulate, accumulate, accumulate. Like I said, I'm personally not doing this, but I would, if someone came to me and they're like, Ronnie, PayPal's a great deal. It's very undervalued. I would be like, yeah, you're right. It is. It's just not for me, guys. And that's okay. It doesn't have to be for everybody. You can pick and choose the stocks you want to invest in. But yeah, you're in phase one. You're in the dip buy box. Looks really good there. Let's get back to number three. Number three, Baba. Alibaba. This is a Chinese stock. This is an ADR. So this means you don't technically hold the actual stock, right? It's basically like, here's your American version of our stock. It's the same thing, guys. It's the same thing. Everybody worries about every so often they bring up like, oh man, it's gonna get delisted, blah blah blah. It's gonna be just fine. It's gonna be just fine. If it gets delisted, you just get the same shares on the Hong Kong exchange. That's it. That's it. You're not gonna lose out on all your money or anything like that. Yeah. So is right now a good buy for Baba? I do believe it's a good buy going into this week. You're not getting it back here at $63. You're not getting here back in the beginning of 2025 at $80. You're not even getting it here after tariff getting down, around $100. You're getting it today for $174. But I truly believe, just based off the fundamentals, PE of 22, less than a 1 cash flow to debt ratio, a 0.30 peg ratio, beautiful. Profitability, right? You have return on invested capital of 13%, very, very nice. 14% return on capital employed, and then net margins of almost 15%. Their free cash flow could use a little bit, better free cash flow yield. I typically like to see above a 3%, but very close to 3% is still very, very good, guys. Here is the strengths, weaknesses, opportunities, and threats. No, duh. It's going to be geopolitical trade tensions, but things are supposedly going good, and we might get a trade deal this week. If we look at their DCF model on Market Dash, they must have went very, very conservative here. They have a intrinsic value of $150.94. Current price is $174. So 13% under overvalued. I want to see what I have on mine, as I do believe that is probably a bit off. Well, I have 188 on mine. So, yeah, mine's a little bit more than theirs. I'm going to go with mine because my projections are conservative. So, maybe they just went even more conservative based on being a Chinese stock. But make no mistake, this is a moat company. This is a massive player and one of the biggest players in the Chinese economy. So, make no mistake, guys, this is a great stock. It's not as great of a deal, but I still think it's a great deal. Especially if we get a trade deal between US and China, Alibaba is going to do really well off that. You see revenues are continuing to climb, about to go from 136 billion all the way up to almost 200 billion, 157 up to 230. DCF intrinsic value is $188. Like I said, currently today it's sitting at, wrong thing, $174. So, probably like 10% margin of safety now. EPS 162 fair value. So, not as great of a deal as you were once getting, but lo and behold, another big investor here. You have David Tepper. Oh, and you also had Charlie Munger, who held this stock for a long time at $153 per share. Maybe still holds it. I know Charlie Munger has passed, but maybe, the Daily Journal Corporation does still hold this stock. But yeah, you have David Tepper holding almost 13% of his portfolio. Again, he bought at $91. So you're not getting the same deal. So figure out if this is a good buy for you and your portfolio, guys. 53% bullish versus 48% bearish on institutionals. 10 out of the 12 have a buy rating on this stock. $200 the high, average 174. So between 174 and 200 makes a lot of sense. Makes a lot of sense for where our fair value and our intrinsic value is at about $188. That makes a lot of sense. So there's still juice left to squeeze in this name, but you just have to, figure out if you want to take that. I wouldn't say risk. Well, everything's a risk, right? But if you want to take that, you want this in your portfolio or not, or you want to pass on and go for some better opportunities. Number 4. Number 4, Amazon. Yep, Amazon. 5-year chart shows a 40% gain. Pretty good. But we've also been in a massive bull run. Year to date, get this. Year to date, Amazon is only 0.5% up on the year. What's happened this year? Oh, yeah. Yes, we had a big crash. Then we had a huge recovery, pushed all-time highs, and pretty much every Mag 7 and every one of these companies across the board have just been crushing it. And most of them are at all-time highs, especially in the Mag 7. So Amazon being a laggard in the Mag 7 definitely catches my eye and definitely makes me to want to own more of this stock at this price. The thing you have to understand about Amazon, guys, is when does e-commerce stop growing? When does Amazon Web Services stop growing? when does ad revenue stop growing? Like massively. 5 years, 10 years, 20 years? Guys, like e-commerce, like I can if you told me e-commerce was still growing 20 years from now, like year over year, I would believe you. People are only ordering more and more and more offline or online, sorry, off Amazon. People are only ordering more off of Amazon. Amazon Web Services, they are the leader, right? I don't see when that stops growing, especially with AI and everything coming from there. More apps, more websites, you know? Like when does it stop growing? Just ask it, when does it stop growing? They just got into ads. They can do so many more ads on Amazon Marketplace, right? They could do so many more ads on Prime. Thursday Night Football is huge. Maybe they get more into football, more into other sports. So many things they can keep growing in, guys. So many, so many. They can just keep growing and growing and growing and growing. So over the last 5 years, when has Amazon not been a buy? Right? When has it not been a buy? The only time you'd be down money on buying Amazon was if you bought at the beginning of year 242, or you bought in September at 240, basically. You'd be down a little bit of money right now. But if you bought all through here, just because you're like, yeah, Amazon's a moat, Amazon's a massive opportunity, massive company that's going to continue to grow as far as the eye can see, you are up, up, up. Okay. 33 PE, is that rich? Maybe, but is it for what I just told you for how long and how much they can grow? Basically forever. Cash flow to debt 1.63. They're going to have more debt than most other companies because they have a lot of warehouses, they have way more employees. Biggest thing, guys, the biggest thing. Profitability, these net margins right here of almost 11%, these net margins are going to grow like crazy. They're getting so much into robotics. And, I hate people losing jobs, but from as a shareholder of the company, I need them to keep their SG&A costs down. I need them to, innovate. And if they're innovating with robots inside their warehouses, that's only going to make this company better, leaner, and meaner. Okay? So, net margins, I do think they're going to continue to rise. Free cash flow is going to continue to rise. Yes, they're spending a ton of money like all other Mag 7 companies are on right now on AI, data centers, all the whole nine, right? They are spending like crazy. When that slows down, as robots come in, as they continue to innovate, they'll have less employees and then they'll start actually making real concrete money based off of e-commerce. When that actually happens, because they're going to get to 1 trillion in revenue probably within the next 2 to 5 years. I can see them do it within 3, honestly, like realistically. So 1 trillion in revenue, they don't get a lot of they're like a grocery store in the or a restaurant with small margins right now, but that's not going to last forever as technology gets better, robotics get better, and they implement those. Okay? So I think Amazon's like a forever buy, honestly. And right now, knowing that they've lagged the whole market and they're not even all-time highs here when a lot of other companies are, especially Mag 7, I think it's a great buying opportunity. You can see strengths, weaknesses, opportunities, and threats. I'm not going to insult your intelligence by sitting here and reading this all to you. You can pause the video and read it. Intrinsic value, $262.85. You have undervalued of 17% or margin of safety of 17% or upside of 17%, however you want to look at it. 63% bullish, 37% institutional sentiment bearish. Here's some of the biggest popular investors. Here's some of the biggest holders. Scroll down here. 10 of the 11 have a buy on this name. 262 is the average. And that's exactly what the DCF says, 262.85. You have a low of 235. Current price is 224. They're above analysts' lowest target. Look, I don't trust analysts as far as I can throw them. But if we are underneath the lowest price of what analysts have for this company as a price target, look, you have 5. I really like this. You got 5% upside to the low, 16, 17% upside to the median, and then 34% upside to the high of 300. You told me before halfway through 2026, Amazon's a $300 company, I'd be like, yeah, makes sense. So again, they're currently at 224. So yeah, it's a buy. It's a no brainer for me, guys. I'm going to continue to buy this name. Lower than the median here. Their typical P is like 59. Do I believe they should be at a 59 anymore? No. But do I believe they should be at a 34? No. I think they should be at least a 40, if not a 50. Right. So price to sales higher, obviously. Price to book lower compared to the median. Equal price to free cash flow. And you can see their balance sheet here. So look here. We pull up Amazon. We pull up Amazon in our log or forums. You can see that I have a $287 discounted cash flow intrinsic value, 23% margin of safety, 5% margin of safety for their EPS, $704 billion for 2025, going up to $1 trillion by 2029. And this is, again, these are like very conservative assumptions. I think they can get there in 2028. And then you have almost 1.1 billion trillion, wow, trillion. And then your obvious free cash flow is going to continue to rise as well, getting you to win almost $100 billion in free cash flow by 2027, 2028. And EPS is going to continue to skyrocket, uh, almost almost tripling from 2025 to 2030 on EPS, guys. That's Amazon. Now we have number 5. Number 5 here is going to be Adobe. Adobe's thrown away, left for dead. No one cares about Adobe anymore. I think they're a great buy here. 2022, they saw a low of $278. They're currently at $353. You have this support right in here between 283 up to about 335. And honestly, I can't see them come down to 283. I think this 330, 320, 320 to 350 has been very strong support, as you can see right here. Very strong support. Another cool thing about Market Dash is you can switch to auto TA, and you can just put supply zones, demand zones. You can check whatever you want on here. You can put in signals. You can turn on hidden whales, and you can see dark pools of where people are buying. So they're really cool app that they're working on here. We can zoom in here. We can see that there was a whale that sold $18.4 million just recently. There was another whale that sold a bunch. Yeah, so a lot of selling down here. Really a lot of selling after this pop that they've had off this bottom. Off this bottom, you're seeing a lot of these whales selling, where here you were seeing a lot of buyers. So a little funny, you're seeing whales buying here, but selling at the same spot. You see we're below the 200 SMA, and we are 200 SMA, but we're above the 50 moving average. So the 50 moving average, we could see a continued move. You see we came down on this support down here. We bounced, and 370 looks really juicy right there, like we're going to get back there. Or up to this demand zone, moving back to the 200-day moving average, getting back up here between like 370 to 390 area. So this is another cool factor. You can do automatic technical analysis. They got a lot of things on here that you can mess with, and yeah, for the price, I think it's a great product. So definitely like this product. We'll continue to use it. I am talking about a potential partnership with them right now. So I'm not partnered with them yet. So these, everything I'm saying right now is strictly just my opinion on the platform. I'm not, not just being like, yeah, that's great. I actually really think this is a good platform, a really good product, and I'm actually really enjoying using it right now. Again, not partner with them in any way right now, but we are in the talks. Institutional sentiment, 53% bullish, 47% bearish, and the best reason, the reason I like this the most This intrinsic value rate here, this allows me to, not need to do my Excel spreadsheet anymore. And I can kind of just run my own projections and compare them to theirs. Makes my life a little bit simpler because they run this DCF model as well. And that's my favorite tool to use. So, yeah, DCF model for them says it's not a buy right now. It's fairly valued, but I would probably say for mine, actually, I don't have one. I forgot. I do not have one uploaded for this right now. So I don't know. So we're just gonna go with what they have. DCF, it's not a buy, but watch this. We come down here to valuations. 21 PE is well below the median, 42. SaaS companies usually, garner of 30 PE. So this one's well below that. 12, almost 13 price to book. 15, 16 EBITDA. Price to sales of almost 7. And then price to free cash flow of whatever that was. Strengths, weaknesses, opportunities, threats. You can see them on the screen there. Biggest threat, AI driven competitive threats. Guys, I don't see Adobe so good. And the whole like type in, give me a picture of this or that. I don't know. Every time I use it, it doesn't really work that well. So I just don't know. I just don't know. Yeah, you're at strong support here, guys. You're at very strong support going into earnings coming up here. Profitability, look at this. They're buying back shares like crazy. Return on equity, assets, invested capital, uh, employee capital, net margins, guys. Look at this: 55%, 24%, 37%, 44%, 30% net margins, and they're buying back shares like crazy. Look at this. Look at this. Look at that. From 2020, they had 479 million shares outstanding. They now have 424 million shares outstanding. That's insane. That's insane, guys. So basically, in another couple years, they're going to have bought back, you know, almost 80 million shares. That's insane. That's insane. So Adobe, another one. Current price 353, low is 280, but you have 8 out of 9 buys. Average is 436, giving you really nice margin or upside here of 23%, and then 41% to 500. I think if they come in with good revenues and people start, realizing that Adobe's not just going to get knocked off the rocker, like they're going to be here for a little bit of time, guys. So number 6, our last one, Target. Yes, Target. Everybody wants to talk about Walmart. Walmart's doing really good right now. Target, super undervalued, guys. This is a 5-year chart I'm showing you. A 5-year chart of Target. During COVID, they were at 150 plus. They're right now sitting at $94. They're at the lowest point, one of the lowest points right now that they've been in the last 5 years, with $106 billion in revenue. With, can you just pull that up? View revenue chart. Oh, yeah, nice. Oh, nice. I didn't even see this. Look at this. This is a great feature. Trailing 12-month revenues continue to climb, right? They've kind of like steadied out here up here. On a trailing 12-month basis. Revenues, they come and go, come and go, come and go. Okay, so I don't love that revenues have kind of, stalled out a bit, you know. Oh, this is quarterly. This is quarterly though. So, yeah, these are all quarterly. I'm going to give them some more feedback to make this to where I can do it based on yearly. I want to do it yearly. Let's see. I guess this is yearly, trailing 12 month. Okay, cool. Free cash flow, annual. Free cash flow has been going down. Don't love that. Well, no, look. So it came down in 2023, and now they're starting to climb back up. Return on assets, equity, lower than the median, lower than the median, lower than the median. Net margins. Shares, they bought back so many of their shares, which is amazing, going from 500 million all the way down to 454 million, so almost 50 million shares they bought back. Yeah, Target looks good too, guys. It looks good. Um, fair value of 130, intrinsic value 130, current price 94, 38% upside. Let's see what I have on mine. We type in Target. Yeah, 65% margin of safety, $165 DCF based on the cash flow model. So I have $30 higher. So we can say 131 up to 165 is fair value, and the company's at 94. 144 EPS, 53% margin of safety. Very, very undervalued, guys. If you believe Target's not going anywhere and it's going to be around, right? Then it's definitely a buy today. The average is 108. So giving you a 15% run up. 195 is the high, almost 100, over 107%, almost 107% upside from today's price. And then the lowest analyst, one sell, has $80 price tag target. So a 15% downside. So yeah, guys, there's your threats, right? Declining in-store traffic. Yeah, they've gone through this before. Typically it's during recessions that they don't do so good because they're a little bit more expensive than Walmart. And then typically when times are good, Target does really well. So you just have to understand that. Let's see. You have to start with Target. No, we haven't gone through a recession. We do have to realize we went through some like crazy high inflation that they had to fight through and get out of now. And as inflation continues to come down, and the consumer gets in a better place with money. I don't know when that is. Right? We can say that it's right now, but I don't know. I don't know if everybody's in a great place with money right now. So once we can get the consumer to a better place with their money and get this inflation to continue to coming down, I do think you see Target, continue to climb higher and things get better. If we go into a recession, then all things are off, and then yes, Target probably goes lower than where it's at today. But yeah, cool guys. Let me know if you like this. This is the first time I'm doing this. This is the first week of undervalued weekly, or what are we going to call this? Top value of the week, top value stocks of the week. What are we going to call this, guys? Let me know in the comments below what we should call this. Top value of the week, top value stocks of the week, um undervalued of the week, undervalued stocks weekly. What should we call this, guys? Let me know. While you're at it, hit the like button, hit the subscribe if you want to see more of this, hit that notifications bell so you don't miss any of my new videos coming out. Follow me across Instagram, X, the whole nine if you want content on every single platform. From me personally, I do investing, I do trading, I do it all. And again, if you want to join our High Five Collective, whether that's investing or trading, we've been doing really, really well lately with our investments, and we've been doing really, really well with our trading. So those will be linked in the bio below. I appreciate you all. I hope you have a great rest of your day. God bless. Talk to you guys later.